Hey, it's Jack from Alphacharts with the state of the market video. Today is March 15th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. Thank you all for watching the video. If you haven't done so, please like and subscribe to my YouTube channel. You can find me on X at Alphacharts365. And of course, I do run a subscriber group. It's $10 a month. You get a ton of information. It's an educational group where I don't ever tell you where to buy or sell, but I do give you the setups, the focus lists, the market notes, twice a week, midweek videos, all kinds of bonus content and setups throughout the week that I see coming my way. And basically it's my thought process that I'm sharing with all my subscribers. For $10 a month, you also, can ask me to take a look at charts, and I do chart reviews for members as well. So really amazing deal for, again, to go to Alphacharts 365. If you need that person just to bounce off some ideas, information of, that's another way that people use this service. So check it out. Let's get into the charts. All right, so let's go start with the SPY, and we have this rising channel wedgie action, and we have a break of the wedge, still holding the 23-day or 20 days right there as well. So it's not like a complete like disaster, but this could be the start of something, right? And I know I've shared this with people and with members, that we do have a pretty significant divergence that's been developing really since mid of December, right? December 14th or so. And so we have a divergence. We also have the rising wedgie look. We have the breakdown. So is there reason to be cautious? Yeah, there's reasons to be cautious, right? It doesn't mean you have to get bearish, just reasons to be cautious. On the week, the SPY was down 0.39%, so nothing crazy. And RSP was down 0.71. So again, shows broad-based selling overall in general. Now, RSP was breaking out last time we talked. Super bullish, right? Now it's starting to break back into the zone. If we start to lose 163 and then 160-ish or so, that's a problem. That's a big, big problem. So we got to be watching that. Uh, that's huge, actually, if that happens. On the bearish side, when I talk about huge, looking at the Qs, very similar. We have a channel. Um, you know, it's not quite a wedge, but it's still within the channel, and we're starting to break down from it. This 427 area, that's the 50-day. It's right there. By the way, you see how much weaker the Qs are? Zoom in here. Because we're already below the 23-day. We're back right on the supportish area. I don't know if we're going to get a bounce or not here or not, but the 50-day is right below it. And we have this general area around 422-ish. And then, of course, this 400-ish area. Again, we are seeing same divergence in the Qs that we were seeing in the SPY as well. Divergences are hard to trade off of because you can usually always find one, but when are they really actionable? I think this one may be more actionable than others, and I've been watching it for a while, and I thought it was going to be actionable right in this area right here. And you see how it just kind of bounced. Looks kind of similar-esque to this right here. So we'll see if this continues lower or not. But on the week, it was a 1.17 drop in the Qs, pretty significant. And it was a 1.56 in the equal weighted, which you see has not broken out yet and is getting rejected in that general area. Let's go to the daily. And yes, right there. This was an area that we've been watching. I used to call it $90 or so. Got basically up there to hit that 90. Let's see. High was 89.71. Close enough, right? So it's now below the 23-day. This is the equal weighted Qs. And we're selling, and looks like it's headed break for the 50, 86.50-ish or so. That's a big test. If it break 86.50, that's a problem, right? I mean, price hasn't been below the 50-day on the equal weighted Qs since November 14th when we started this nice big rally up. So we'll see what happens here. But again, not a good look for equal weighted Qs. Looking at the mid caps, holding up better than what we've seen so far in general. Right now, it's just a retest of the breakout, right? I think 530-ish or so. That's right about where the 23 will be in within a day or two. I think that's a big deal around 530-ish. Above 530, I think we could be long mid caps, and I think that's okay. Below 530, not so much. So, again, on the week, mid caps were down 1%. And then let's just go straight to IWM here. And IWM was down 2%. So, again, underperforming, closed underneath the 23-day. We're starting to see that turn here. 50 days at 198. That's the level, right? That's the level we need to watch. Above 198, everything's fine. Below 198, and I think we have much bigger problems in general in the market. So again, there's some caution signs being shown out there right now. Let's go to the XLF over here, and it was basically break even on the day today. Strong uptrend. We are in the financials right to this supply area. We have it. So could we see some supply come in the market here? Yeah, we could. We aren't really seeing too much of it yet. It's holding up well, but that's a possibility. On the week, up 0.49 again. So now you see the divergence. What's strong? Financials strong. What we've seen in the indexes, none of them were up on the week. First one thing we've seen is up. Let's look at SMH. SMH was down 3%. Again, this is so far the biggest loser on the week, right? This was a Fibonacci retracement or extension, I should say, that that I had posted, and it pretty much tagged it almost to the penny, and now it's come back some. How much is it coming back? We don't know, right? We don't know. But 214, then the 200 level. Those are the next areas to watch. I don't think that the move is over. I just think that it needs a break. It went up too much too fast, But we'll find out. But for now, the move is, I think for now, the move is over, right? Until we see what else happens. Equal weight semis. So this is maybe the bigger deal, right? Down 5.72. So when you take NVIDIA and some of the other mega caps out of there, things got real nasty with a potential false breakout here. Look what happened last time it did this, right back here. Boom. Now it did this, and not so good, right? After we were looking at this little pinch right there, this little breakout, that was awesome. And non-stop selling the semi names below the 50-day, close below the 50-day now. 200s at 209-ish. We got to be very, very careful. I think semi names are definitely an avoid for now. And again, not looking good in general as an indicator. Not a great look. We'll go to transports next. And you see that was pretty rough on the week as well, down 2.5%, and below the 50-day. Looking at IYT, this is the cap weighted version, not quite as bad. Here we go, down 2.31, about the same percentage, but above the 50-day. So again, some of the big names holding it up a little bit better. And let's go into home construction. Was up today, right? That's good. But on the week, it was down 1.54. And then let's go for XHB, which is, there you are. Here's XHB. And that was actually up on the week, XHB. So that's interesting. Some more retail names in XHB versus ITB. But overall, you have this kind of something like that, right? Hugging this trend line. And I don't know if this is gonna be a widening pattern or not. I could probably just flip this way, right? And do something like this, right? Let me just fix this up. Something like that. Now that may be a widening pattern that we could get a hold of, right? And maybe it's going to come down to test the 50-day right around 99-ish or so, or maybe this area and this trend line right there, maybe. But either way, we're seeing in the economic sensitive sectors, areas where we're hitting top ends like an XLF, where we may see some supply come in, some outright weakness like in semiconductors, probably the most important one of the bunch. Transports looking kind of weak at this point, right? And home construction, holding up okay, but not great. So that's my assessment. I mean, do with it what you want. When it's time to be real rosy, I'll be bullish, but when there's signs of trouble, we'll acknowledge them, right? Let's go into the internals now. VIX, widening pattern, which again we've talked about since December 14th. Isn't it funny? December 14th is a date that keeps coming up. I think that's an important date. But widening pattern, and I wouldn't be surprised if we see a spike in VIX, given everything else that we're seeing in the indexes and some of the other price action. Looking at credit spreads, super tight on these credit spreads. That's bullish, tight credit spreads until we see a big blowout spike, something like this, right? Back in March, right? Something like this. I think that this is just a normal run-of-the-mill consolidation pullback retracement that we may be seeing. Let's look at the percent stocks above the 50-day moving average, 51.5 basically, and we have this kind of choppiness, right? And this peaked right around, well, here's December 14th. It peaked at December 28th. So in that kind of vicinity, my still belief is that we're going to come down more. Again, that narrative would be totally within the idea of, again, things hitting upside targets and some general weakness in the market. That would make sense. But call ratio, right in the middle, no real signal there, right? And then let's look at the DXY dollar. And let's just switch this to bars. We saw now this, in my opinion, should have broken down, but it broke up. So that's a little bit of an expectation breaker. And so when we see those, I think we have to be more cautious and, retest of the 104 50-ish area, 104.30-ish, somewhere around there. I think that's very possible. And again, more dollar strength would be bearish for markets in general. So again, that goes along with the whole, puzzle or picture that we're trying to put together here, story we're telling, right? And let's look at the TNX, and we are seeing a breakout above 4.3. So that's a pretty significant move right there. If it gets above 4.35, I think we get back up to fives. And again, that would be a bearish scenario, right? If rates are rising, then that's a bearish scenario. So we got that going for us. And I'm just going to look down here real fast. You see new highs, new lows. We're seeing more new lows than new highs. And momentum is negative again, negative as well. So everything I'm looking at is telling me that it's time to be cautious in the market. Cautious does not mean bearish. Cautious just means, know where your stops are, right? Take some profits if you got some. If you like this type of assessment, I do this 7 days a week for my subscribers all the time, every day. I give out market notes, midweek videos, focus lists, special watch lists that we keep as a group that I think are going to be big winners. I mean, just all kinds of stuff. So check me out. It's only $10 a month, and it's month to month. There's no contracts or nothing, so it's a great deal. Hope you all are doing well. Good luck.